Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Monday. And here we sit now on the 21st of August, dog days of summer 2023. And it's a crazy time because volume comes and goes in the markets. Traders will take a smaller and smaller bite out of them up and through Labor Day, and then they come back and it's like the whole world turns on again. Now, we have AMC about to have its merger first of the APE shares and the regular shares. Then we're going to get the conversion of that, as I understand it, to a 10-for-1 stock split. ARM is about to go with the largest IPO of the year. As I understand, their dog and pony show will begin at the very first week of September. I am sure they'll watch NVIDIA's earnings come out on Wednesday and try to figure out what that means for their pricing. I think that's going to be a very important area. I'm not even sure they're directly like a NVIDIA. Are they more on the outskirts of all that is what I always wonder. We have Jackson Hole coming up at Friday. What is Fed Chair Powell going to say? I think he's just going to be data dependent. And we have interest rates continuing to do one thing, adding yield. Why? Because you've got the Fed running off their balance sheet, and you've got the U.S. Treasury going into the market with massive amounts that they need for funding, paying up for them. So even the bond buyers are saying and scratching their head, and they're all going, well, you just got to keep buying more and more over time. But it does appear for the moment that high interest rates are here to stay for a while. Now, I rarely do this, but I think we should cover NVIDIA again, going into their earnings, and then I want to drop it after we get there. So by the weekend, I want something new to cover for the weekend edition. Is that fair enough? Write me. Tell me what you'd like me to cover so that I have an idea what you would like. But when I look at NVIDIA, you can see how the stock market came down and then all of a sudden back up today soaring. Why? Market's now getting money pouring in front of the earnings. You've had some of the bank that follow this stock saying that it's going up to the 600-plus level. And people are going, I can't afford to miss out on that. Will the earnings be as stellar as the market thinks? What if they're not? I mean, you've got a lot to deal with right here. Could be a blowout. I don't think anybody has a handle on it. And as I've told clients, and I said it this morning to all my subscribers, and I'll say it to you, I think the one stock that I look at out there for the moment that you can't afford to be short is NVIDIA under any circumstance. It's the leader of this new parade of AI. Will it become instantly worth what the valuations are? I think that is the big question. To say this is going to go up from here another $150, $200, I mean, that's what some of these valuations are coming in right now. It's up 200% for the year already. I'll leave you decide that. As a chartist, you have higher highs, higher lows. A battleground's been the 18-day average. When you were over it, it was fine. You got under it. You fought a battle. And today you got back over it. Obviously, the market is trying to make a statement going into the earnings report. The key resistance, as I see it on the way up, throw the name off the chart. Bollinger Band. Generally, the first time you hit a Bollinger Band, you get thrown back. Yes, you can fight it, but it's a zone that you're talking about. Will that happen? In this case, that would be up at the 477 level. When I take a look at where the market's at this point, coming up, getting itself into right now overbought territory, I consider any level over 70 overbought. Number two is the market's coming up through here, trying to figure out what that might all mean or not mean. That to me is important. Rivian coming down. I'm hearing a lot of analysts going, oh, you don't want to be long it. Okay, you don't right now. When you lose the embedded reading, the red line closing over 21, that'll be the loss of momentum. Right now, the market has the bears in control of the market. The next stopping spot might well be what we talked about here. We did it all last week. We've been talking it since up here. Is it going to make a run for the 200-week moving average of closes? That's going to be the real question for this chart and what it does when it gets there, if it gets there. In the gasoline market, we keep slipping back down. And today they tried to lift the futures. They couldn't hold them up. Now, this is all going into, as you know, the Labor Day holiday coming up, the driving season, the last of it. And after that, things change and change dramatically. But as I repeat, and I'm going to repeat, this is the seasonal time where gasoline and heating oil go up. Heating oil has been going up. When we come to XLF in the financial sector, look at how these have been coming down in these service sector for that. Still in a bear market, embedded until you lose. With the red line closing over 21, the market is still basically in a bear mode, momentum-wise. Now, the first challenge of a 200-day average in a while hasn't occurred. Does it mean if we stay under it, we're going to go to the 100? It's an open downside target. In XLI, we have been running the lower Bollinger Band to the point where now you got your embedded reading. So rallies in this market are likely to be sold as long as the red line doesn't close over 21. If it closes over 21, the bears won't defend that position, in my opinion. But until then, there's a way that on these rallies you do it. If you've taken my enhanced Bollinger Band course, you learn that technique. And at the end of this, I'll put that ad up again for you. Remember, at any point here, you can take your cursor, move it to the top. And what happens when you do that, it'll take you right into the course area. Next, AMC. Lower highs, lower lows. You can see what the market is doing here as it's coming down. Okay, I agree with that. You have a market that is getting hit hard. Why? Because they're going to merge these two together. The APE are going to go in here. There's a way that they have to do certain payouts and so on. And then they're going to have a reverse split. I don't know the math of it, so I'm not going to give it to you. I'm reading what everybody thinks the math of it is, but we'll see. But meanwhile, today you're down 23% in the share value. So even if you went from here with a 10-for-1 split, what happens when you merge in? Does it kick up the value, down the value, the monies they're paying out? And what are they trying to do with the split? It's very evident. By having a higher valued stock and a valuation on that stock overall, what they have is they can think they can go to the credit market and do some more of the borrowing. I wouldn't touch that with a 10-foot pole. In coin, you can see how the market has come down, and now you're in an important zone. You finally got down to the 100-day average zone and the Bollinger Band. That doesn't mean you have to bottom in any manner, but it's the first major test of big-time support. And again, this stock has been getting beat up because it's not getting any breaks in part from the SEC. And as interest rates keep going up, you're not getting people wanting to own these cryptos in the manner they were. Look at your trading, look at the price of them, and you get an idea what's going on. I mean, right now, yields are pulling all the air out of the room. You know, we say Donald Trump is pulling all the air out of the debate. Yields are pulling the air out of the room. Yes, you get bounces, but it's all about that yield, and it is impressive. In XHB, okay, with higher mortgages, you get problems. And now we're reading today all over the different areas. Go to Market Watch and some of the others and read about the stories about jumbo loans. The banks aren't catering to them the way they were. They're running about 1/4 percentage point over a standard 30-year, according to today's story. And the banks are going, you know, we got to pay interest on the monies you have with us. You're not keeping that kind of cash. I don't know. You'll do it right now, but you might not do it later. The game changes. 7% mortgages changed the game for a while. Keep that in the back of your mind. Energy sector. It tried the upside, didn't go anywhere. I happen to think you're caught in sideways action here that is just not pretty in any manner. And GLD, as you can see, well, it came down, and the question is, does it want to stay under that 200-day average? What's putting it down like that? What do you think? I can tell you the answer. High yields causing the dollar to be relatively strong, weighing on a market that pays no interest, and traders are going, what do I need this for? The Fed is still fighting inflation. They still want 2%. The dollar is strong, and people are making nearly 6% on a lot of their money instruments. Why am I owning gold? That is the dilemma you've got. Silver surprised me today, and I was wrong on silver. I didn't think silver was going to lose its embedded reading. It did. I'm wrong, and so be it. Now, the good news is on the futures contract, I had what's called the mini contracts, the very small and only 50% of a normal size position because you were in a funny area and you weren't breaking as I thought the market would. They're now changing the gold-silver relationship. Is it going to last? I don't know. But a correction is underway in that, and that's why you've got the rally there. Copper bounced today on news that was nothing out of China. What they keep doing is they dance around the story. They don't fix the problem. So they made a small change on, I think, a 5-year instrument. It's not going to get people to do anything. They're telling the banks, lend more. People don't want to buy. I don't think they understand what's going on. You're watching all these property developers. Another one today in Hong Kong. Sunik, was it? They got under $1 a share, so they become suddenly a penny stock. These were billion-dollar companies, okay? And now they are in serious trouble. So you want to tell somebody, hey, go on, we'll lend you the money, buy from that developer. And you're going, you think I'm blind? You think I'm not reading what is going on? You think that I want to buy something and they're going to use my money to fix other property and I don't know when they'll get mine done? I don't think that's the problem. It's a bigger problem that China can resolve, but they have to step in. And how they do it, beyond my pay grade. TLT, still very bearish, embedded. Now, you're coming into a big number, the lower Bollinger Band. Today's low is 92.23. 91.80 right now is where that lower number is. And I'd respect it. I would think the pros are want to take some money off between here and there. UUP, as long as you stay embedded, I stay friendly to the dollar. Ever since you had a bullish crossover, you've gone up. You did make new highs. You're not running away. I think the market's in a hold until they get an idea of what Fed Chair Powell's going to say on Friday. That's my own guess. FXE, bearish, embedded, getting a bounce. But again, are we going to get a bearish crossover where the 18 gets under the 200? That won't be pretty on the chart either. So as I said, this is the time to look at those slow stochastics because you're getting plays off of them. And I think you'll continue to for the next 2 weeks in the market until we get into the first week of September. How do you do it? Well, here, pay attention to this. Remember, you can click at the top of this at any point. It'll take you right where you have to be on our website to read all about slow stochastics the way that I teach. Take care. And by the way, Bollinger Bands, it's a combination. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.